Oh, god damn it, I'm muted. Yeah, all right, great, awesome. Thanks for letting me know. So basically, yeah. So basically, what I've been saying here for the last couple of minutes is we have some very interesting developments here in the market this morning. The Silicon Valley Bank collapsed this. Yeah, I guess it collapsed this Friday, with the authorities stepping in, taking control of the bank, making sure that the customers that could get their money back is going to get their money back. We had Janet Yellen saying they're not going to bail it out, like they're never going to do something like that again, or not with this bank at least. But then we had a meeting with the Fed. Well, I didn't have a meeting with Fed, but the Fed had a meeting this this Monday, I believe. I believe they've had the meeting, and they decided that they're basically going to bail them out. Like, so depositors at the Silicon Valley Bank were insured up to 250k, 250,000k, but that was actually only, as far as I like. Don't quote me on this, because I've just kind of like woke up, got out to my desk, and scanned the news, and like this is what I picked up, right? And basically only 3% of the customers at Silicon Valley Bank were secured, because it's a business bank and they had way more than 250k. So only 3% of the actual customers at Silicon Valley Bank had were secured. So basically, what the Fed is doing, and they're saying like, oh, we're going to bail them out. We're going to secure their deposits, and they're not only going to secure the deposit of Silicon Valley Bank, they're going to do so with as far as I believe, most of the banks in the US, to prevent a bank run. Because, like, listen, pretty much no bank out there, especially not the smaller regional bank, has the capital at hand to if there's going to be a bank run. So that's just how banks work. You deposit money, then they take that money and invest it. And obviously, if you come to the bank the next day and say like, I want that money, they're going to say, well, you have to wait, because we've invested that money and we have to sell that investment. And if that investment is underwater, like most of the investment that Silicon Valley Bank did, they were heavily underwater on like long-term treasury yield, like bonds, I'm pretty sure. So they collapse, right? And most other banks will do that as well on a bank run. So what the Fed is doing here, they're trying to secure the banks in case there's a bank run. And basically, what this sounds like to me is quantitative easing, right? They're basically adding more liquidity to the market. So they've removed liquidity from the market using, what we call quantitative tightening, which is what we're seeing here with them battling inflation. And now for the first time, we're basically seeing quantitative tightening, or quantitative easing, which should be very bullish for risk assets like Bitcoin, the stock market, and all that fun stuff. And that's probably also why we got stopped out on the AD CAD short. So we're going to look at that. So let's jump right into the charts here, and we're going to look first. Let's look at Bitcoin right here. So we had, let's get a clean shot up here. So we had that dump on Friday, right? So when is Friday? Friday is the 10th. So yeah, here. So we had the bearish reaction. When we broke this level right here, which is the let's say 21.5. So we broke below 21.5, and that was around the time when news of Silicon Valley Bank possibly collapsing came out. And so Bitcoin moved lower right here, and then we had news of stuff being safe. And also the one of the biggest reasons here, and one of the things that kind of the crypto world was focused on, is the fact that Circle, the company behind the Coinbase, and the stablecoin USDC, had a lot of their the first news that came out was like USDC is basically fucked, because they have a lot of the reserves for backing that stablecoin up at the Silicon Valley Bank. Well, they didn't really have too much. They had 3.3 billion, I believe, which is, well, I think it's like 8%, maybe lower, maybe much lower, but 8. I can't remember. Let's see. I have some notes here. It doesn't matter. So it's not a huge amount, right? Let's actually take a look at USDT versus USDC, and we can see. So as far as I believe, Tether has no connection to Silicon Valley Bank. They have no exposure to Silicon Valley Bank. I think they have had no exposure to Silvergate as well. I don't even know if they have an exposure to banks at this point, or any American banks at least. So let's look at Tether versus USDC on Coinbase. Holy goddamn, what's this? The fuck is this? Yeah, all right, because it's USDT versus USDC. That's why. So it seems like it's getting back to somewhat of a stable price. Let's do USDC versus USDT. I think that's, yeah, right. So this is where we see the price of USDC dipping quite a lot. I remember waking up looking at my crypto portfolio where I do have a bunch of USDC and USDT, and it was down quite a huge amount. And I'm like, ah, god damn it. I'm just sick of this because I got a lot of stable coins. Like I got money in stable coins because I'd like to keep it in crypto, right? But I decided this weekend that, you know what, I'm just going to start cashing out the stable coins that I'm not going to use for active trading, because I'm just like, guys, like I'm more and more transitioning over to well, I've actually this and last year transitioned over to be more of a it's more of a day trader. You're more of a day trader with a swing trading approach, where I'm just getting in and out of the markets, and I really don't have any long-term investments other than my traditional stock funds and Bitcoin and Ethereum. So Bitcoin and Ethereum, I'm buying that on a weekly basis every weekend. I've been buying Bitcoin and Ethereum every weekend since Bitcoin dipped below 20K. Pretty good on that. So basically, it's the simple weekly dollar cost average strategy on Bitcoin, and then I'm investing like equal amounts in the in traditional stock funds. But most of my money, most of my net worth is in crypto. I mean, in trading accounts. Okay, so I view my trading accounts as my savings account, because I do get a lot more yield on having the money on my Oanda account, which is all connected through all the funding firms and all that. As you've seen through this Oanda demo account, I've got this connected to all the other accounts, and this is also connected to my live Oanda account, where I basically use it as a savings account. So that's where I make most of the money. I make more money from trading, much more money from trading than I would be like than what I get from my investments in Ethereum and Bitcoin and the stock market and that sort of stuff. So I'm just getting a little bit tired of crypto. I mean, it's just a shit show. The only things I really care about in the world of crypto is Bitcoin, right? I do love Bitcoin. I do love the idea of Bitcoin, and I kind of like Ethereum because you kind of have to like Ethereum because of the impact it has on crypto and the use cases with the smart contracts and everything. But everything else, I think it's just bullshit. I mean, everything else is just 99% of all the products out there is just scams. It's just products getting rug pulled. It's really it's a shit show out there, and so yeah, I'm slowly but surely starting to transition away from being a crypto investor and just being, not a Bitcoin maximalist. But when it comes to investing, there's only really one thing that I care about, and that's Bitcoin. So if you look at my crypto portfolio, it's probably like 99% Bitcoin and probably like 10% Ethereum. And that's just long term. I'm thinking in terms of 5 and 10 years. And other than that, I'm just trading altcoins from a very strictly, day trading perspective. I don't really care what I'm trading. I don't care about any of the products, because I know that 99% of them will die at some point anyway. So I'm just gonna get in and quick in and out in the local trend, and then get out and secure that money. And that's what I'm doing now. I'm taking the crypto profits that I did through the last bull run, when I basically exited at the top. I'm not sure if you remember that, but I got out at the top, secured that profit, placed it in stable coins. But now I'm slowly but surely starting to realize that as fiat, because like that's where I make the most money. Put that fiat in the legacy broker account, trade Forex, and I make much more money. Yeah, okay. So back to the whole idea with the Silicon Valley Bank and what I think is going on right now. So Silicon Valley Bank collapsed, and the Fed is basically starting a stealth quantitative easing here, with basically promising the depositors safety, and they're gonna try to prevent a bank run. Well, actually, they have prevented the bank run because they have secured depositors up to a certain amount. So when they go to the bank, if there's like, if everyone runs to the local bank and says I'm going to get my money, they can actually get their money because the Fed has actually secured them and basically put on the money printer once again. And USDC is now returning to its peg, which is lovely to see here. And that is, is not, this shit happens, and it's most likely always going to return to peg. And we've seen a lot of tweets from the CEO of Coinbase, I guess, and the guys responsible for the USDC stablecoin have basically said that everything's all right. We the every USDC is redeemable to the US dollar 1 to 1, and there's not going to be a bunch of there's not going to be a lot of problem. So what we're going to look at now, I want to look at the reaction to this. So before going into the charts, I want to actually try to make up a scenario in my head what I think this means for the market. And that's a good exercise. So you read the news, you get an understanding of what the current risk sentiment is, and then you're going to try to translate that into what you think is going on the charts. And then when you open up the charts, you're going to say, oh, it's that I was basically right. And then that means have an understanding of what have a good understanding of risk sentiment analysis. So this should be bullish for risk assets and bearish for the US dollar, basically. So if we look at the dollar currency index, the DXY, the DXY, we should see the DXY going lower. We should see Bitcoin going higher. We should see all major indices, stock indices, going higher. Maybe the exception would be Japan index, because it is what it is. Let's look at that. Let's look at the dollar currency index. This should be heading lower, and it is, right. So we look at the 4 hour. We have basically, I guess we have kind of like broken a. Let's look at the daily. Yeah, I mean, so it's had a huge gap to the downside. It's basically starting to trend. It's breaking the local uptrend. So yeah, we're getting a bearish move on the dollar currency index, which should be bullish for Bitcoin. So obviously we know where Bitcoin is. So Bitcoin is about to break above that level right here. So we broke above. Bitcoin did now break above the level that once broken to the downside had a massive bearish reaction. So that's good, right, for risk assets. Now let's look at the indices. So we're gonna look at US 30. Actually, not looking that bullish, but that's the tech. That's a very that's Dow Jones. So use 100 is the tech one. So it's not really that very bullish when I look at the S&P 500. Well, I guess it opened in the green, and we did see moves to the upside. So it's definitely not moving lower, but it's not as bullish as I would have thought. Um, Not as bullish as I would have thought. But Bitcoin, let's look at gold and silver. Gold moving higher, silver moving higher. This is actually where we want to short silver as well. Same. Well, gold, the short on gold is completely invalidated. I like how gold and Bitcoin is moving pretty much in a exact same local structure. That's pretty cool to see. So at least we have Bitcoin moving higher, and I think that's because of the news that the Fed is going to help out the Silicon Valley. We want to look at. Let's go over to Bloomberg, because I just want to see if we have anything new coming out. All right, let's go to the next one. And by the way, tomorrow we have the CPI, the core inflation rate. This is interesting that all of this happens pretty much at the same time. But yeah, tomorrow we have the inflation rate for the US. I'm gonna be live. I'm gonna be live with Dirk and two other guys on so two other people, not guys, because yeah, never mind. So at I guess around 12 UTC, 12 UTC PM, 12 PM UTC tomorrow. I'll be live on Prime XPT Academy with Dirk. I'm going to be talking about that event, and we're probably going to be talking a lot about SVB as well and how this affects the overall markets. So definitely check that out if you're interested in that. So I don't think there's anything new on the SVB situation here. Well, now the S&P 500 is actually moving lower quite rapidly. Let's look at the dollar currency index, and I guess it's finding some sort of support right here. We have the S&P 500 actually moving higher. It's not what I expected to see this morning. We had US 30 moving lower. I mean, S&P 500 moving lower, US 100 moving lower, S&P 500 is I mean, it's guessing in local range. We can't really make anything out of this, but I mean, if it does break below this area, we are seeing a bearish daily candle, and not what I expected. UK 100 is moving lower quite fast. Possible long scenario on Japan 225, the Nike. Because we're right in the reload zone right here, comes up with a good horizontal level. Looks really good. I don't really trade the stock indices anymore because, you know, I have this WAN, the demo account connected to all the Forex funding firms, and the prices across all the different firms and all the different exchanges are very different. So if I open up a position on this account that I have at Oanda, based on this chart on Oanda, it's going to give me a very different entry on the other exchanges. But this is definitely an interesting long here. So this is the orange list here, and as you can see, I don't have any indices on here. But let's go through this and let's see if we can make anything out of this. So AUD CAD got stopped out this morning, and usually when I wake up, so I've stopped grabbing my phone the first thing in the morning, especially when I have open trades. Because if if I wake up and the first thing I do is just grab my phone and I see a trade getting stopped out, it definitely affects. It could definitely affect my mood for the whole morning. So what I do is I have my my daily journal, and I write in that. And if I have an open trade and I know it's close to stop loss, I'm gonna write something like, I'm gonna try to figure out if I have accepted the loss of this trade when actually entering the trade, which would have been, well, basically, yeah. So I would have tried to figure out, have I accepted the loss of this trade this Friday? And I came to the conclusion that yes, I have accepted this trade as a loss, because that's something I always do. Right before I enter a trade, I always ask myself, or I try to always accept the loss of that trade before entering the trade, because it's way easier for me to manage the emotion in trading if I if I accept every trade as a loser. And I definitely did that. So when I checked my phone and, well, actually, when I went down to my office and I checked the shots here and I saw that it stopped out, I was completely neutral. And that's great because that means, I'm trusting the process, I'm trusting the system, and I'm not, this loss will not infect, it will not affect me in a negative way on my next trade. So if I, for example, would have felt very strong negative emotions from this stop out, I would have needed to perhaps take a break from trading today to make sure that the negative impact of this trade hitting a stop loss won't affect the next trades that I'm going to take, because then if it does affect the next trades, it's that trade will be based on emotional trading and not strictly systematic trading. Let's put on the slingshot here. If I have the time, which I don't think I have, but if I do have the time after this market scan, I might be able to put in a quick scalping session with the slingshot indicator. Like you can see in the scrolling text below, if you want to get access to the slingshot indicator, you have to be subscribed to the newsletter, because we will be releasing the newsletter the 1st of April, and it's going to be released in small batches. It will only be available to 100 people, and I want to make sure that every single one that uses this indicator are serious about trading. So it's only going to go out to newsletter subscribers, and it's going to go out in batches of somewhere between 10 and 20 each time, at a first come first served basis. Yeah, okay, so AD CAD can gonna go in, and I'm going to journal this one. So it looks like Edgewonk has something new here. It's a profit calendar for March. So March 1 had one trade. Have I not taken? Oh, not a lot of trades in March. One trade here. February, 4 trades. Our monthly win rate is now 50%. We're at around break even for this month. Overall win rate 59%, 13% profit. We're break even this month. This is going to be a loser though, so we're going to add that one. It's going to add trade. We open this trade on, I think maybe I can go into trading view and do everything from here, so I don't have to go into the meta traders. We can actually look at this transaction history. Yeah, I have everything here. Notifications log, account summary. I do think this is the... Can I show everything here? So I don't have to show... All right, so AUD CAD. So that's the buy order. I had a sell order here. Market order, AD CAD, the 9th, 1930. What's this? The 9th, and then 1930. This was on AD CAD. I'm getting an alert here. Let's see what that alert is. So we're actually having two short signals, but that should not be a short signal until 11. So maybe there's something wrong with that alert. We have to check that one. It gave me a short signal, but the candle has not closed, which means, well, it did close now at 10. Why did it close at 10? Shouldn't that one close at 11? This one closed at 11. That's pretty weird. Is it because let's see, exchange. If I go to exchange, man, all right. So if I go UTC 10, that's pretty weird because I should not have. That alert should come in at 11. It always comes in at 11, but now the 4-hour candle close is closing at 10. All right. Yeah, me. Right. So did the US time zone change today? Let's look that up. Okay, so right, the 12th. Oh, really? So daylight saving time started. So basically today. All right. Okay. So that must be it. And the can. All right. So these candle close are based on the US time zone. So we're not back 1 hour. It's all very confusing. I don't like they have to remove that shit. Like daylight. All right. Anyway, so ADNCD, we do have a strong short setup on ADNCD. I don't think this is the trade though. I don't think this is going to be a trade. But let's try to kind of like let's analyze this first, and then we'll go back to adding the ADNCD at the AD CAD short as a loser. So I do like that rejection here happened right at that level. That's pretty good. What's up, man? Good to see you here. Hope you're doing all good. Yeah, I think that this is why. So the use time zone did change. My game plan was waiting for 16, 18K again and got buy from Southeast, and now we are pumping. So I don't know what I should do. So what you should do is just you should use dollar cost average. Just buy it because like basically you had a game plan, but not like you obviously only had one plan, so you should have different plans. Like what's the plan when this plan is invalidated, and what do you do when that plan is invalidated? Now obviously that plan is invalidated and you're saying that you don't know what to do. What you should do is you should like the easiest thing to do is just dollar cost average. If a Bitcoin is like, look at this, right? So I know I'm like switching back and forth. That's my probably my ADD in the works here. So if you look at Bitcoin, okay, we do have a range here, right? And I mean, as long as Bitcoin is trading within this range, as long as Bitcoin is trading within this range, wouldn't it just be a good idea to use dollar cost average, like buy once a month or buy once every week, like I do? I buy once every week, and I buy some Bitcoin and I buy some Ethereum, small amounts, and then when I have big dips like this, I buy a little bit more. But if you look at the daily or even the weekly, I mean, it's pretty obvious that Bitcoin is just in a good area. I mean, on the bigger picture, I mean, it's quite low. It's from the very low of this range, it has dipped almost like around 75%. So we're down 75% from the lows. Like why? Like it's a good area to be buying. So instead of having like complex and complicated plans on when and how to buy Bitcoin, just apply dollar cost average strategy within this range when it's a good area. And then if it dips even lower, well, then continue buying. And it depends on what your time horizon is. Like if you're thinking about holding this position for a month, well, then maybe dollar cost average isn't the best strategy for you. But for me, that's great because I'm thinking in terms of 5 to 10 years. So I don't really care if my average entry is 16K or 12K, because if Bitcoin breaks above the previous highs and start trading up to 70,000 and 75,000, like I don't care if I'm long from 16 or 10K. Just I'm just glad I'm long at the overall bottom, right? So that's what I do. Yeah, maybe not. I do think though that this is a mini, like this is some sort of reason to be bullish. I think well, like I'm not a macro analyst. I'm not a macro trader. I'm just a short term trader. I try to be like I try to sound smart during these live streams, like to to one get more views and be like I know what I'm talking about, but I really don't know what I'm talking about when it comes to macroeconomics and shit like that. However, what I do really know, though, that is short-term trading, day trading or swing trading from a day trader's perspective. That's something I'm pretty good at. So let's look at this trade right here. This rejection at that level is very good, and I know we had an idea of looking for a rejection up here. We also have had an idea of looking at a rejection here, and we did get that signal. If you look at the 4 hour, we did get a strong short on the RLZ slingshot indicator. But is this a good trade? We have to go to the 1 hour, and I do like that we do have that level right here, and price actually did come up and retest that level, and that's where we actually had the rejection that printed that short signal. So to get a good entry on this, to get a good entry and a good risk to reward, we have to kind of enter up around the 50% fib, and weekly open would have to be our TP1. Now, for that to be possible with a good risk to reward, we would have to have our stop loss probably somewhere here. And that's just way too risky, because it's very likely that, well, first of all, if you go to the 1 hour, we want to get filled here, right? So it has to retrace or pull back quite a lot. And looking at the 1 hour trend, it makes little sense. Like this 1 hour trend here makes little sense, because this trend now here actually looks bullish. And if we do retrace up here, the bullish trend would actually be intact. And I don't think that's going to happen. And even if it does happen, that stop loss is way too tight. We want to have a stop loss all the way above that level, and that's simply not going to happen based on this setup. So this is not a good signal. Well, it's a good signal, if you trade it on the 1 hour. But according to my system and the way I'm trading, it's just simply not a good trade for me to take. So I'm going to stay out of that one. Let's go to the next one. We got oil. Let's see what this setup tells us. I like that bearish engulfing candle. It's probably that candle that printed the short signal as well. So this is actually looking pretty interesting. We have the stochastic RSI bear cross. We have price hitting a good level. We hit that monthly open. We're below the 50% fib. There is a high time frame level here. I think we can even go out to the that's a massive range on the daily. That's a massive range on a daily. Maybe the rejection happened on the range EQ. So let's put the range lows here, range highs here. And we do have that rejection happening at a range EQ area. But overall, this is not something like I don't want to trade this. Look at this. You zoom out and all you see is a range, basically. I'm not a range trader. I want to have clear trends. And this, in my opinion, is not a clear trend. So that's not a signal. So we got no signals this morning. Next signal is in 3 hours and 50 minutes. Let's go through the orange list and try to make a plan. Are we going to journal this trade? AD cat. Really? Is this the only AD cat trade I've taken since November? That's crazy. RLZ slingshot 4 hour. This is a sell. Let's go here. We're going to look at the entry price. Entry price is going to be that one. And then we put in stop loss. Stop loss is also going to be our exit price. And the exit date is going to be, when did we exit this trade? We exited this trade at, let's do 7:30. It's not really that important. 7:30. 1 hour plus minus is not really that important. Take profit, we need to adjust the take profits. What's the average exit of this one? It's going to be around here. That's our profit, average R of this trade. Then we're going to post a screenshot here of this one. I think what I first want to do is I want to post what the chart looked like when I actually entered this trade, and this is what it looked like when we entered this one. And I it looks beautiful. It looks like a really good setup, and this is really, this is really interesting. So when you're getting stopped out on this trade, you're gonna look at this chart and you're gonna say, "Holy shit! This looks like a terrible trade. What was I even thinking entering this trade? Look at all this choppy price action right here. It looks absolutely terrible." But you gotta remember, like, this is what it looked like when we got stopped out, and that's a good thing. I mean, get price action looking bad when you're stopped out, that's a good thing, right? Because this is a complete change in behavior. This type of range here, this type of low time frame range around this entry area, around the 4-hour moving averages, we haven't seen this in this whole trend. This is actually a very clear change in behavior, and you want to get stopped out when you have a clear change in behavior, because the signs of a change in behavior is also a sign of a bullish break in the market structure. So what you have to do, when you're getting stopped out, you have to go to the point of entry. This is what the chart looked like when you entered, and like, honestly, this is really good looking. Like, this is a really good looking trend. Look at that, hits the trend line area perfectly. And with trend line area, I mean this area, right? And then what I like to do is, like, I want to have like a complete clean chart when doing this analysis as well. So I'm just gonna remove everything, and you look at this trend and you say, this is a really good short. This is a really good short. It's just a shame that it got stopped out. And the reason why it got stopped out is because trades using this system, believe it or not, but they do get stopped out quite a lot. But sometimes they're getting stopped out. 4 out of 10 trades will get stopped out, which is almost half of all the trades. So this is what the trade looked like when we. Thank you, man. And welcome. Thank you for joining, and thanks for the nice comments. I'm gonna try to do these live streams more often for you guys, but it's been I'm very busy with working on the RLZ trading and trying to be as active as possible in the community. So that's my priority at this point. But I'm gonna try to do as many live streams as possible. I'll also have a webinar for the program students coming up in 45 minutes. I have to end this shortly. All right, so that's the screenshot of entry, and then we're going to add a screenshot of exit as well. It's good to have when you look back. You're going to go through the journal to have these two screenshots. Like, that's what it looked like when they entered, and then you ask yourself, is this a good trade? Yes, it's a really good trade. And then this is what it looked like when you stopped out, and you say, is this a good stop out? And say, yeah, I think it's a pretty good stop out. Now, this might go to TP1. Like, you might get stopped out here, and it might go to TP1. And honestly, I don't care. It was a good trade. I don't care if this is a stop out and then hit TP1. All I care about is it's a good trade according to the rules of the system, and that's all we have to care about. Now, it's unfortunate if it does hit TP1, but it doesn't matter. And it's probably going to be another setup if it does move lower as well. So this is all the setup. Are we going to write any notes? Actually, I don't really write any notes in the actual trading journal anymore, because I do that in my pen and paper journal right here. That's where I write it in every day, and I write a lot about trading, which is it's just so much more effective sitting down. It's about 20-30 minutes, sometimes an hour every day in the morning. Like, in the morning, I write about the the day before and try to kind of prepare for the day, for the trading session to come. And then in the evening, I write about the day. And usually, like, a lot of times I do write about trading. Like, every day I write about trading in that journal, and it's a really good way of. Then every week I do like a weekly reflection of the notes in the journal, and it's really good to identify where you're at in your, like, mentally, if you're mentally balanced. So I did my weekly reflection this morning, like I do every Monday, and I've seen that, I wrote that my trading hasn't really been good statistically. Like, if you look at the actual profits, it hasn't really been good. But in terms of process, and in terms of following the plan and following the process, it's actually been really good, and I've been quite balanced mentally. Also, I took I believe last week on Thursday, I took a break because I did feel like I started getting more stressed. And that was because of one of those journal entries. Like, I went back a couple of days and I saw that I wrote a lot about how trading made me stressed, and I had to figure out why. So I took a decision to take a break from Thursday to next Monday, and to take a break from trading, and that worked really well. So I went back, last Monday from that break, and felt completely balanced again. So sometimes you just need a break, because trading can be quite stressful, because when you're always in the markets and there's always stuff to think about and you always have open positions, there's always something that, to be stressed about. And if you are in a position that you're holding over the weekend, especially a position that is close to entry over the weekend, that can also be a cause for stress. Like this AD cat trade, for example, I didn't really think about it, but sometimes I thought about, what if I wake up on Monday and it's a stop out. um and taking breaks and not having any trades open is just a great way to kind of reset that emotional balance. So AD CAD, is it done? Have I journaled this one? No, it's not. I'm not completely done. I gotta go to advanced trade data, and entry is according to plan. Entry time frame is 4 hour. I'm actually gonna mark this as news event closed entry, because I did take a decision to hold this trade open at entry while we had the Central Bank of Canada interest rate decision and the NFP event for the USD. So I'm gonna actually note this as news event trade. Entry confluence is an indicator signal. Well, actually, no, it didn't get an indicator signal at the time of entry. That came later. This is not an indicator signal. Is it a low time frame break and retest up to 50? Let's take a look. Yeah, low time for break and retest up to 50. Immediate reaction, no, it's a 50% fib. 50% fib is the weekly and monthly open. Did we have the weekly and monthly open up here? Where's the replay? Weekly and monthly open. Did we have the weekly and monthly open? So we gotta wait for the indicator to load. We can remove the TP, the Fibonacci, to make it load quicker. It was not weekly and monthly open. Did we have trendline area? Yes, it's a trendline area. Did we have a stochastic or side cross? And we did. So that's the entry confluence, and then TPs hit. None of the TPs got hit. So that's all right. So it's in. Our profit and loss, we're going to look at that one. So what's the actual profit and loss? Now we have to calculate that. So it's a minus 1 R trade. So the value of this portfolio is 112,750 times 0.01, and that's 1,127. So minus 1,127, and then we're gonna round it up. So let's do 1,028. Right, that's it. So now we're at weekly, starting the week with 1 loss. Monthly is 33% win rate, and overall we're now down at 57% win rate. I really want to stay above 60, but then you look at this and you give me like, it's a loser. God damn it, that feels horrible. But then you look at the equity graph and you look at this, and it's like, looks pretty good. I'm happy with this, even if I had a couple of losers here. We can see like that is we had one. It's only 2 losers in a row after like we had massive winning streak. So the biggest losing streak in this journal is actually 2. I've never had more than 2 losers in a row, which is, when you think about it, quite good. So there's nothing to stress about. I'm thinking, when I get to like 3 or 4 losses in a row, I have to limit my risk, because if you look at the funded account on the 55ers, I'm now at minus, I don't know, I can't do the calculations that that quickly, but I should be minus 1% on that account, and the max drawdown is 6%. So when I get down to, if I do get down to 4% minus, I'm going to limit my risk per trade to 0.5% per trade, or even 0.25% per trade. So that trade is now journaled. I can now remove all the drawings from this one. So what we're going to do now is we're just going to do a quick market scan, and after that, I'll have to prepare for the program webinar. I've got ADCAD. Is this? Yeah, this is still going to be on the first list, because we're looking for a new trade when we kind of have something like that. So that's going to be a new trade on ADCAD, probably, if it breaks lower. Euro USD looks pretty strong. We're going to move that down to the second list. Not interested in this trend. GBP USD, not interested in this one, unless it actually breaks to the upside. Maybe we'll see something bullish here. So what we have here is we have a level going through right here. And want to see a breakout and a retest of this level. That might be a possible trade. So we're going to keep that on the first list, and we're going to be adding one alert right here. USD CAD, USD is gaining strength. All right, so it's gaining strength. I don't know what's going on right now, but the idea that I had about the Fed kind of starting a stealth quantitative easing might not be the case. I mean, looking at charts, this is not what we're getting. This is not what we're seeing from the charts right now. So maybe that scenario is just invalidated. The interesting idea, but maybe it just makes no sense. I don't know. But this is USD CAD is kind of following the plan that we had last week, but it's not giving us an entry. I'm still going to keep it on the list though, because this trend is very, very strong. Gold is obviously no longer in the short scenario. It's actually in a long scenario right now, and that would be a retest of this level right here. But then we have the weekly open in the way, so I'm not sure that would be a trade, but we're going to keep on monitoring that one. Silver is in the perfect area for a short, which is problematic because we can't short gold, but we can short silver, which just feels wrong, feels weird. So maybe not that. Like I wouldn't want to short silver if gold is showing us clear bullish signs. NCD CAD hitting resistance here, probably need to see a move higher and bounce here, but still that idea is still valid. That's still something we're going to be watching out for today. GBP AUD, I wanted to see GBP AUD lower. That might happen though, so we're going to keep the idea of this, and we're going to be raising that fib. So you see that the fib levels align as well. Still a pretty good level, but we can't, like, if we take out the highs here, we obviously have to put a new fib on with new anchor points. I don't think that's going to be valid. Euro CAD, new fibs on this one. I don't know about this one. It doesn't really look like something I would want to trade, but the trend is quite strong. We do have a significant level right here for a great retest. GBP NCD moving higher. Got to put that fib higher as well. It's interesting. So we do have a lot of interesting price action lining up here. NCD CHF, this I'm not sure about that one. Not sure about that one. GP CAD. And then of course we have the CPI tomorrow, which is obviously going, like, that's a news event that is going to affect all markets. So we obviously have to be careful with that. I did, however, like last week, I started thinking seriously about ignoring news and just trading my system and just taking every entry trigger of the system, regardless of any news events, because I've actually back tested this. I back tested that last year. And I did it on like 30 pairs. I did it on, I believe, 100 trades, and the results were actually quite surprising. So what the results showed us was that trading while ignoring the news was actually more profitable than, you know, actually caring about the news. And what I mean by caring about news is, if there's a major news event like the CPI for the USD, that will affect all markets. So basically what I would have done in that case would exit the trades that would have been affected by that news event. If they were in profit, I would exit. If they were in a loss, I would probably put in a tight stop loss, and I would not enter a trade that day because of the uncertainty of the news event. That approach actually had a lower profitability than if I would just ignore news. Which, if you think about it, that kind of makes sense, because what I did was, when I developed this system, I did so without taking into consideration news events. So I just went through all the pairs and all the markets and back tested this idea without thinking about the news. The actual idea of trading, not trading based on news, is, it just makes sense. It makes no sense to open a position on USD when you have the NFP event or something like that. It just makes no sense, right? But statistics doesn't lie. If I've back tested it, and it actually seems like it has a good win rate and profitability by ignoring the news. And you also have to think about, my system is a trend following system, and usually the trends, they continue to trend. And if you think about that, kind of makes sense. If you have a trend, regardless of news, the probability is that the trend will continue in the direction prior to the news, unless there's something extremely unexpected being released during the news event, which doesn't really happen that often. But GBP CAD is still on the first list. Bitcoin, obviously not interested in this short on Bitcoin anymore. That is invalidated. Got CAD JPY breaking lower. Still interested in the short here. Euro NCD. Euro NCD looks really good. All right, this looks really good. This might be a trade. This might be a trade. So we have to put an alert on right here, and one lower. So we might have a trade on Euro NCD. GBP JPY. Yeah, I mean, this is, yeah, I'm not sure where you got this from, but yeah, it's a great quote, and I definitely agree. But there's a difference between trading the news, because when you're trading I'm a price action trader, but you can also take the decision not to trade during news events. That's not the same as trading based on news or trading the news. That's just taking a step back and say, this is unpredictable price action during news events. I'm just going to take a step back and not trade it. GBP JPY is actually coming into the short environment where we might want to short it. Let's see if we have anything here that we can move up to the first list. ADUSD should be up. USD JPY. Well, USD JPY can actually be shortable. NCD USD. Really? That's concerning. I'm not sure about that, though. Oh, I'm seeing some news on this, but I'm not sure when it got released. Yeah, this is actually from today. What's the ticker on this? Yeah, it should be FRC. Alright, so why is this happening? Is this because it's like they're fearing a bank run? I mean, that would be pretty bad. But I mean, First Republic Bank, which is the chart we're looking at, did give out a statement this weekend saying that credits have been secured by JP Morgan. So I guess they're basically taking a loan or whatever from JP Morgan and secured the deposits, secured all the depositors worth like $70 billion. Let's see. Let's see how this develops. That's definitely scary. But I like if the depositors are secured and there's a bank run, I guess there's not shouldn't be a huge problem. But this is not good. I mean, if another bank will collapse, that's not good. I mean, wouldn't that be? Well, so I mean, fundamentally, this is why we have Bitcoin, right? Banks are collapsing, and that's why we have Bitcoin, because Bitcoin will not collapse. If Bitcoin will there will never be a bank run on Bitcoin. Like, we have to understand how banks operate. Like, they operate with today we have the fractional reserve banking system, which is basically like the banks doesn't have the money. They invest that money and they reinvest that money, and they don't have the cash. Like, it's not that when you deposit a $100 bill to the bank, it's not like they take that $100 bill and put it in a safe and like this is your money, and whenever you want it, you can take it out. No, they invest that money and then reinvest that money, and they don't have the cash at hand. So if everyone comes to the bank and says like we want our money, they don't have that money, and they're gonna collapse, right? So that's just how banking works today. So that's the danger of a bank run. That's usually, like, in some countries you see, like, when the bank is fearing a bank run, they shut down. Like, there's like you can't get your money, like they shut down, because they know that if everyone comes in and tries to take the money, they're going to collapse. But that can happen with Bitcoin. You can't have a bank run on Bitcoin, and fundamentally, this is why Bitcoin was created. It was created after the 2008 crisis for this very reason. So this is that's the beauty of Bitcoin. So fundamentally, Bitcoin should move bullishly when shit like this happen. But makes no mistakes about it. If more banks collapse and the financial system is on the brink of collapsing the way it did in 2008, Bitcoin will collapse as well. I have a very hard time thinking that Bitcoin will. We're years and years and years until we have a scenario where Bitcoin might actually work as a hedge against the traditional financial system. And that's not where we are right now. You see that Bitcoin is very correlated to risk assets. And if you go to the Bitcoin chart, you'll see that it already stopped dropping, right? I mean, it already started dropping. The daily candle is bearish, right? And the 4-hour candle quite bearish. And if we break below this level again, we're basically in the same area where we were prior to this pump. So this pump was not caused because of the the unpredictability of the U.S. banking system. Like, this pump was most likely caused by the fact that Circle went out and said that they're basically secured all depositors who want to have who want to sell USDC to USD one to one. They've secured that, and the Fed also comes out and says they're going to secure depositors at the Silicon Valley Bank. That was bullish for the market, and that's why Bitcoin rallied during the weekend. Now, obviously, the S&P 500 is closed over the weekend, right? So we're not going to see the S&P 500 rally over the weekend. But now, when Monday morning comes along, maybe this pump based, like this news-based pump on Bitcoin, maybe the people buying this anticipated something else, and now we're seeing that something else. I mean, now we're seeing the opposite of what people thought would happen when Bitcoin pumped. And that's what I'm thinking, because if you look at the S&P 500 as well, we're moving lower. Right, we're moving lower quite rapidly. So something's going on right here. There's definitely a lot of fear in the market right now. A lot of fear in the market right now. And that fear is probably more banks collapsing. And if we do see this First Republic Bank collapsing, which I highly doubt, but if it does, that's a second bank. Now the contagion is, the ball, we get that snowball effect. So the Fed has to kind of step in and take care of this. Otherwise, we're probably going to see more banks collapsing. And at that point, I mean, we're looking pretty bad. We're not going to see Bitcoin pumping in those scenarios. Even though this is why it was created, Bitcoin is not really doing what it's supposed to be doing. Bitcoin is following risk assets because it's a risk asset. It's not a hedge against the traditional market like a lot of people tries to make it. All right, guys, that's it for me today. I have to prepare for the webinar that's coming up in 20 minutes for the program students. Yeah, all right. Not in terms of setups, like I did the market scan here, and in terms of setups, there's not a lot of interesting stuff here. It does seem like oh my god, it does seem like AD CAD actually did stop us out on the weekend and continues lower. What an unfortunate event, but shit like that just happens. It just happens. You know what? Like if you do add a fib here, you see that even though I like this setup, that wick right there actually hit the midpoint of the reload zone just perfectly. So one way to trade this would have been, if I could have done anything differently, one way to trade this would be to be very patient and place orders on the 50% fib. So be very patient. Place orders on the 50% fib, TP1 here, and then stops above the monthly open and above the whole reload zone. So if I have stops above the reload zone and above the whole monthly open, we would not have been stopped out. We would have had this instead. So there's a lesson right here. That's a pretty important lesson. And that is sometimes it's worth placing orders on that 50% fib, even if it means it's above the 20 EMA. So maybe that's the lesson here. I have to think about that, kind of take that with me into the next trade and the next trades this week to try to get as high entry as possible, because we would have been filled right there. We would have been filled on Friday. So that's definitely something to think about. All right, guys, thanks for joining, everyone. And I hope you guys are subscribed to the newsletter, because we will be sending out the RLZ Slingshot. We also have some really good announcements coming up for a trading competition. Everyone in the RLZ trading room will be able to join a trading competition where we will have pretty big prizes. We'll have 1,000 USD will be divided up amongst the winners. We will also give away one free spot of the trading room. We will give away free access to the trading room, free access to the trading program, and also a couple of subscriptions to the RLZ Trading Slingshot Indicator. So definitely sign up to the newsletter and make sure you are opening the emails to be invited into the competition, where it's going to be fun. It's going to be like 2 or 3 weeks, and it's going to be a minimum of 20 trades to make sure that you can do YOLO in on a long, and we're going to see like if it's going to be interesting to see how you guys manage that. I'm going to be scalping. Using the RLZ Slingshot Indicator. Hopefully I'll win some money. All right, guys, see you and have a great day, and thank you for watching.